The Urban Agriculture Production Small Scale and Beginning Farmer Program is partnered with USDA, NRCS, and FSA to offer this series. And today we will hear from Farm Loan Chief Nicolas and Farm Loan Officer trainees Kameron Holland and Sean Truesdale. And they will be discussing the difference of microloans and standard loans. Thank you all so much, and that we have this opportunity to hear from Fred, Kameron, and Sean. At the end, we'll have an open Q&A session, and I will now hand it over to you, Fred.
Hey, good morning, everybody. Thank you for that warm welcome. Again, just to introduce myself, my name is Fred Nicolas. I'm the Farm Loan Chief for the Arizona State Farm Loan Programs. I've been with the agency going on 15 years. I've been pretty much all different types of positions here at the agency, ranging from a program technician, loan officer, loan specialist, and now Farm Loan Program Chief. So I do have the ability to, an opportunity to present to everybody. So thank you again. I'm here today also with two of our staff over here, Kameron Holland and Sean Truesdale. And what we want to kind of focus on is we're going to talk a little bit about our loan programs, but give an opportunity to have a different audience understand the different loan processes, because that's a common question that we usually have over here is that, okay, outside of the loan programs, what's the expectation behind understanding and going through the loan process? So hopefully what we're here to kind of talk about today gives you a glimpse about the process. And if there's any questions, there's the chat box over there, and we'll be happy to answer at a later point. So USDA Farm Service Agency, one of the many different agencies under the USDA logo. How FSA kind of is here about is that we used to be under Farmers Home Administration. Then Farmers Home Administration broke into two different agencies. Rural Development that does the single family housing, the bigger business industry loans, and Farm Service Agency handles the agriculture portion of it. There's two different sides to FSA. There's the farm program side that does with the disaster related programs and other assistant programs that might help mitigate the risk with farming operations. Then the farm loan programs. The farm loan programs offers loans to help farmers and ranchers get the financing that they need to start, expand, and maintain a farm. Okay. And Kameron, you can go ahead.
My name is Sean Truesdale.
Oh, sorry, Sean.
It's okay. We're going to speak about the overview of the loan programs. So we have guaranteed loans, which are loans that are made in service through other lenders. And then we have direct loans, loans made in service through the USDA service centers. All loans are evaluated and need to be eligible. All loans are evaluated and need to be eligible, feasible, and meet security requirements. We have 5 different loan types. We have the farm ownership loans. It's up to 40-year repayment and $600,000 limit. We have farm operating loans, which is up to 7 years of repayment and $400,000 limit. We have microloans, which include up to $50,000. Emergency loans, which is its own little thing. And then we have youth loans for the youth between the ages of 10 and 20. Just quick notes. To remember, farm ownership is $600,000. Operating loans are up to $400,000. Microloans are up to $50,000, and youth loans are up to $5,000.
So just to add on over here and help supplement Sean's overview is that the side to the right, these are the direct loan side limits. Guarantee loans go up a little higher. So taking a step back, guarantee loans are made in service through conventional lenders. So we recommend to usually go through any sort of lender that you have a working relationship with. So you go to that bank. We also do have banks that do participate in our guarantee loan programs. Then you would apply under their commercial loans. If you don't meet their regular underwriting credit standards, then they can do what they call guarantee. The guarantee is in place that if a borrower was to default on the loan, USDA Farm Service Agency can pay up to 95% of the loss. So what this does is that it enables lenders to provide financing for producers that don't meet their underwriting credit standards, but give them the ability to provide financing with some mitigating factors like the guarantee loans. Our direct loans, like Sean said, made in service through conventional lenders. And the biggest difference between our loans compared to regular loans is that we're supervised credit. So I know that most consumer loans or residential loans out there, the only time that you would hear from the lenders is that if you needed to make payment. We do make periodic visits to the farm, and this is just to ensure that we are trying to set up our producers that we work with for reasonable means of success. So we would do field visits just to see how you're doing, and monitor the progress of the farm over here. Sorry, Sean. Anything else you want to mention on this slide?
No, Fred. Thank you.
Okay. I'll go ahead and go to the next one over here.
Okay. Next, we have the FSA 2001. This form is used to obtain information from applicants applying for the FSA services. FSA is required to provide assistance if help is needed to fill out the application. The FSA is required to send you a notification if your application is complete or information is needed within 7 days. So in essence, the FSA 2001 is the general application form. If there is any doubt or questions on what to put on this form, the FSA will assist you. So the 2001 is just a general application for the loan. And then you would fill out what type of loan, and it'll be explained further on.
Thank you, Sean. So a little bit more information to supplement the form over here is that the FSA 2001 is just a general loan application. So what we're trying to intend to do here with the presentation is just to kind of give you an idea of what the application looks like. And this application, what the vision behind it is more like a one-size-fits-all sort of form, because historically, like with any sort of government assistance, is that there's so many different forms that you have to fill out to even enter the door. So this form actually consolidates probably between 7 to 10 different forms under this form over here. So we're trying to be able to provide understanding behind it and let you know that, hey, I know that you have to fill out forms in order to get assistance with the agency, but we are here to help along the way and fill out any forms that you do need assistance on if needed. So thank you for that, Sean. The next slide over here, this is the first page of the FSA 2001. So kind of giving an overview of what the 2001 is kind of talking about over here is that the first page is talking about the actual operator of the farm, and some other bullet points that are described over here, kind of what Sean alluded to earlier, is that the different types of loan programs that we do offer: the ownership, operating, microloans, and emergency loans. So the microloans, there's not a specific loan program. The microloans, in a sense, are branch-offs of our ownership and operating loans, because the two major caveats that are difference between our regular ownership and operating loan and our microloans is that if it's a loan that's $50,000 or lower, it can be considered a microloan. So the microloan is good for producers because, in the sense that what happens is that there's a gap between somebody that's established and somebody looking to start off or take that next step in their operation. And the microloans were put into place that, hey, this is a farmer that's kind of starting out, kind of navigating through the process. And the microloans are lower documentation, lower paperwork. So if you were to come in for that $50,000 loan or less, then it's more of a streamlined process for the producer to apply and not have to go through as many feasibility and eligibility requirements compared to our ownership loan and operating loan. So how I like to communicate it to prospective applicants or inquiries is that there's a certain expectation with our loan programs is that someone coming in for a maximum loan of 600,000 for our direct ownership, maximum loan of 400,000 for our direct operating loan. There has to be there's a plan in place to repay back that loan, because the fall coming in from basically almost $1 million worth of financing compared to 50,000 is significantly higher than someone coming in for a microloan. So the expectation for someone coming in for a microloan is smaller in size, smaller in stature. So there's a lot more flexibility to be able to provide someone coming in for 50,000 compared to upwards to $1 million. The next bullet point over here is that if you are a current borrower with FSA, the FSA 2001 is also the form that you would use in order to apply for primary loan servicing. So primary loan servicing, we do understand that agriculture is, innately a high risk business. So we do have resources and programs available for our existing borrowers. In the case that something was to happen, hey, FSA, I'm having trouble. What can you do to help me provide, some sort of financial relief with the trouble that I'm feeling over here, whether it be market conditions, disease, something outside of the farm, maybe a personal circumstance. Primary loan servicing is there to help producers continue, with their operation going forward. Next page over here. So this is the general information that we need. So this is pretty straightforward as far as the legal, who is the primary loan applicant. So ask for general information, social security number, county of the headquarters, where pretty much where the business is headquartered would dictate where we would kind of direct you as far as the direct loan programs. Is that we do have offices across the state. So depending on where your office or your business is headquartered would help us give us an indication of where we would direct you. So in the meantime, I involved Kameron and Sean over here to be able to put a face to the name and let you know that, hey, Sean, who spoke earlier, helps out with the loan programs over there in Pinal and Pima counties. And Kameron, who will speak soon enough, helps out with Maricopa County. So our Maricopa County office covers Maricopa, La Paz, and Yuma counties. What else do I want to emphasize over here? So we had a discussion earlier on the side before this, is that in the bottom portion over here, hopefully everyone can see it over here, is that there's self-certification. So depending on your race, ethnicity, and gender, our loan funds are appropriated through Congress. So we have a pool of funds that's given through the different states and different counties throughout the nation. And within these pool of funds, if you have done some research in the past in regards to our loan programs, is that some of the outreach materials that are given out suggest that there are beginning farmer loans. There's not exactly a beginning farmer loan that we do offer over here. The beginning farmer comes into play into consideration based off of where we get the loan funds from. So we have these big pool of funds, and within these pool of funds, that there are different smaller ponds that the money gets pulled for, depending if you're a beginning farmer, a non-beginning farmer, socially disadvantaged producer, or a non-socially disadvantaged producer. So socially disadvantaged is a USDA term, kind of just to kind of fit the category if you're a minority, whether through race, ethnicity, or gender. Okay. Entity applicant information. If you are an entity looking to apply, this is where you would fill out that information. So whether you're an LLC, limited liability corporation, S Corp, a trust, whatever the entity is, a formal entity is set up over here, all that information is needed. So for an entity applying, there are some things that typically are needed in order for us to understand the organizational structure of an entity, like the organizational documents, license of good standing, there's a duly adopted resolution that will also be required from the entity. So the duly adopted resolution is just a formal statement from the entity requesting that the entity to apply for financing from USDA Farm Service Agency. So those are some things to kind of consider and would be discussed with the loan officer that you will be working with over here. E is that if there's an entity and an embedded entity under the entity, we'll case by case scenario, excuse me, and we can discuss about it a little bit more because I know I can kind of go into it about different entities. So we don't dictate how you're going to operate your business. All we try to do is understand how it's currently structured. Then we'd be able to kind of fill in the blanks if you do choose to apply. Okay, Cameron will go ahead and discuss a little bit about the next couple of slides.
Oh, hello, good morning, everybody. So this is part the loan request, which is on page 3 of the FSA 2001. And for the loan request, pretty much what we're asking for this is just a breakdown of all the proceeds that you're intending to use for what you're requesting for. So with number 1, you see the new loan request. That's for borrowers that, are brand new, requesting like different, loans and everything, and for like returning borrowers as well. With the loan servicing requests, that's for more like PLS, people that are in primary loan servicing requesting a new application because they got to go through the new application as well. And so that would be the amount requested. That would be the outstanding balance to what was due on that loan amount. And then the transfer and assumption, that portion is mainly due for like borrowers that intend to transfer to loan to someone else. That new applicant or the person assuming the loan would have to request what the outstanding debt is, as well as any other new loan proceeds they need for that operation. But pretty much this loan request is just generalized. It's just quotes that we need to differentiate like what you guys need or what the borrowers intend to use the proceeds for. Again, for the farm ownership, we don't do any form of pre-qualifications for real estate purchases, and then workers with sellers and real estate agents to help educate them on the USDA process, application title, escrow, appraisal. But yeah, this is pretty much just the loan request in itself. And with 1A, 2A, and 3A, you can make as many requests as you want. It just has to fall between the maximum amount that we can give on that loan limit. So if you would want, like, say you can have the FO, that would be a request, one of the requests. And then you can also have a request for the operating lines as well, whether it's annual or term. So that's pretty much what the loan request states.
Thanks, Cameron, for that insight over here. So what we want to try to illustrate with the loan requests over here is just commonly encountered things when people or inquiries come in for possible loan requests over here. So these are just things that we give as recommendations to help us understand how we can kind of use the FSA loans to fulfill what your visions and dreams are with the business operations. So for operating loans specifically is that a lot of times producers come in with a wish list or a laundry list of things that they do need. So what we try to do over here is understand, okay, this is the list of things that we need, but within the list of 10 different things, what are 1, 2, 3 things that you absolutely need in order to start the operation over here? Then quotations and bids do help, because what we try to do over here is that we try to be able to provide enough financing for producers to get what they needed to get done. So for an example, like what Cameron was saying, for wells specifically, or anything that requires some sort of construction, is that, like hoop houses, greenhouses, whatever your operation may be, that, hey, there's a cost included in order to build these things. So quotations and bids make sure that we have enough money to finance to get it done, because I know a lot of farmers and ranchers out there are very hands-on and can do everything themselves, and maybe cut a lot of costs by hiring labor or self-construction. I've encountered many producers that explore that avenue, and what this does is just more of like a worst case scenario, and at the same time, um, being able to hold someone accountable like a contractor to get the work done. So we do understand, like, let's say construction of a hoop house or a greenhouse, to kind of keep it simple, it may cost 50,000, 25,000, let's say 25,000 for a nice tailor-made greenhouse to get constructed on your property. And seeing the cost of materials and breakdowns, you can see that, hey, I can procure this myself and save $10,000. If that's perfectly fine, and if we were able to get the quotation and say, here's the 25,000, and along the way you were able to construct it yourself to get what you needed done for your operation, and you say, hey, Fred, I saved $5,000. I didn't have to spend the full $25,000. Can I use that $5,000 or $10,000 to purchase additional equipment? As long as it fits under the use of proceeds, like minor capital improvements or equipment, we can allow that and work with you on it. We try to be very flexible in a sense to be able to make sure that, hey, we do understand cost of goods change. You're able to cut costs over here, and maybe you have a quotation of a piece of equipment that you do have, and maybe it increased, and that cost savings that you did with the installation of your greenhouse can be used for the additional cost of increase for a piece of equipment. Totally allowable, and this helps us understand how we can facilitate and continue to help you. For ownership, Cameron did mention over here, and I kind of have it bolded over here, is that common practice for farm ownership loans here for the state of Arizona is that you're not going to be able to walk through the door unless you have a pre-qualification. For a federal agency like USDA Farm Service Agency, is that we don't provide a pre-qualification. It's because that we cannot give an indication that you are possibly approved without actually going through the formal process. So in order for us to give you that approval, an applicant needs to formally apply. So a lot of times when we work with real estate agents or prospective inquiries and applicants, is that we try to help everyone kind of understand the expectation with our loan programs, is that understand that agricultural loans work differently than your simple, straightforward single family house purchases. Is that what I try to explain over here is that for a farm ownership loan specifically, is that it's going to take a little bit longer, only because that there's additional factors that we have to consider for commercial ag loans. Is that, for instance, appraisals. Appraisals, most people have an understanding that, hey, appraisals are a week, 2 weeks, but for commercial appraisals, especially like in the Southwest region where there's not that many commercial ag appraisals, typically for us to get an appraisal done, and keep in mind that, and this is usually talked in our loan programs, is that FSA pays for the appraisal, and commercial ag appraisals range a few $1,000s. FSA pays for it, and we don't charge origination fees. But anyways, the average time process for an appraisal, 30, 45 days, depending on the workload of that ag appraisal. So the sooner that, if you are interested in understanding, like you want to purchase a property, the better that we can kind of get ahead of the ball, talk to your seller, talk to your real estate agent. So I know that purchasing property is probably the most stressful thing for most people. And speaking for myself from experience, that the better that we can get above those expectations and kind of break down those barriers, the easier and as smooth as a process that we can do for anyone coming in for a farm ownership loan. Okay, next slide.
So part F, the training, education, experience, that portion is important of the section that, it is on the application FSA 2001, because we need to look at whether like all these criteria that you fill in determines our eligibility. So for example, you got many examples that many of the applicants can fill out, whether they are operator of a farm or ranch for a amount of years, participated in any 4-H or FFA programs when they're younger, grew up on a farm or ranch, so et cetera, et cetera. And we need to determine that if you guys fill in those criteria, that it can be determined whether or not you fall into our eligibility requirements. I mean, it's not to say all of everything, but we would still need to have like income and expense records and just certifications that can verify that. But it just gives us an idea as a loan officer or anybody looking at the application to see what type of experience you have coming into the loan. Also too, like for our microloans, our operating loans and our farm ownership loans, we have a high, like it's a different level of expectation in terms of what we want and require out of that in terms of the education, experience, and training. For the microloan, it's more of a very small expectation. There's not really like, we understand that the loan amount is 50,000, so we don't really have like, we still have a lot of expectation for you guys to repay it, of course, but in terms of coming in, like in terms of the education training experience, there's not a higher stipulation that we would require compared to a farm ownership loan that's 600,000. We would definitely need more experience, education, and training, as well as the income and expense records to justify that you would be eligible for that loan. Also too, just for the training, education, experience part, it determines whether we can waive future borrower training or not. There's another form within the FSA 2001 that is a waiver borrower training that we have our applicants fill out. And if you feel like you don't need that borrower training along with the loan, then by filling out this criteria, it can help justify that as well.
Thanks, Cameron. So just to kind of supplement and add on over here is that we do understand that every person has their own, personal background, and this part over here tries to capture everything and anything that could possibly FSA can take into consideration, because we just want to be able to understand and this is also part of the general presentation that Sean kind of mentioned, is that there's three things that we look at: eligibility, feasibility, and security. So this training and experience is part of an eligibility requirement, and we take in consideration both three things: education, experience, or a combination thereof. So anything that I kind of communicated to applicants that use it as a resume. So anything that you feel that is agriculture related, business related, that might be applicable for this application process, input it over here. Sometimes check marking a few boxes may not capture your expertise, may not capture your true experience. So that's why in the third bullet point over there is that if there's a separate attachment that you can provide, like a separate sheet, provide it. You're not limited to what the application dictates. If there's anything that you feel can supplement, can add more substance to your agriculture experience, by all means, go ahead and put it over there. Thanks again, Cameron. So, G, how am I doing with time, Tiffany? I just want to make sure that I'm okay on time.
You are great on time.
Okay. So certifications over here, these are self-certifications over here. So there's 8 different ones over here. And a lot of it is just more of federal certifications, that if you're an entity, yes or no, have you ever attained an FSA direct or guarantee loan? Yes or no. If there's any pending litigation, are you involved in a bankruptcy, or if you're related or closely related to an FSA employee. It's just yes, no questions. Then a number 8 over here, if it's legible, just add additional information. Okay, this part over here is the balance sheet. It's a balance sheet. How I communicate it is a snapshot of your current financial condition. So assets minus liabilities equals equity. That's what the balance sheet is in a nutshell. So in the first part over here in this section in the FSA 2001 is the farm side. So in the left column over here, it's the farm assets. The right side, liabilities. If you've been in agriculture production, you have some sort of assets or liabilities. But if you're someone starting out, looking to take next steps, perfectly fine. I know that it'll be minimal to an extent over here. So um, this is just the market values are just the culmination of all the assets. Then I think in the separate section there'll be a breakdown. So if you have multiple pieces of equipment, you can list make, model, condition, year, serial number of all those equipments on a separate page. Okay, some things that might help fill out a balance sheet is account statements. So for like cash and equivalents, most loan officers will ask any statement, checking, savings owned by an entity members that are applying. We ask for those sort of things, any sort of loan statements. We ask to provide that information to help fill out the balance sheet over here. Inventory count, if you do have a cattle operation or any sort of other livestock operation, or if you do have an in-house balance sheet, this will help kind of expedite the process because this is information that we do need in regards to it. And it does say over here that we try to get the balance sheet 90 days or less. So if you're like undertaking like a farm ownership loan and it's taking a little time based on appraisal, title work, we would just ask for an update. It doesn't need any major updates, and we can update our system. Over here, cash flow projection. This is the second part of our loan process. So outside of eligibility, feasibility, there has to be a plan in place to repay the loan. So it doesn't matter if it's $1, $600,000. What is the basis? What is the business plan that you're providing FSA to suggest that you can repay the loan? So we take a combination of farm income, non-farm income, and if there's enough money being made from both sources to pay for farm expenditures and non-farm expenditures. At the end of the day, we just want to make sure that it cash flows. That's cash flow projection over here. Some things that are required over here, depending on the type of operation that you do have over here, is that list of commodities. And keep in mind that this is a one size fits all sort of form. So some things may be applicable, some things may not be applicable. So if you have crops, if you have livestock, it's all inclusive over here, and just fill out the information that's applicable for you. Price and yield information, basis of numbers. We need an understanding of the research, or if you're in existing production, the typical production cycle for for your specific operation. If there's any other segments in the operation, if you're wholesale, if you're retail, depending on your operation again, like let's say a winery, if you sell the grapes, if you have a wholesale business where you bottle the wine, you sell it, or retail. I've had different types of wineries that have restaurants or a retail business where they sell out of a commercial building. Non-farm income, things that we can use in order to verify the income, pay stubs, verification of employments, things that might help expedite the application process is to provide your last 3 years tax returns, both federal and state. This is expenses over here. So on the right column, I know it's kind of hard to read. This mirrors a Schedule F in the tax return. So FSA doesn't dictate how you're going to record your income and expense in your tax returns. If you're an entity, you do a Schedule C, Schedule K, or a Schedule F. Whatever the case may be, this is just an example of how a Schedule F that captures most farming operations, but may not fit your needs. But anyways, kind of going into it is that no matter what type of schedule that you fill out, communication needs to happen between the applicant and the loan officer to be able to understand the full nature of how money comes in and how money comes out. And that's the reason for MOBI. If this doesn't capture your specific business, then like the training experience, a separate attachment, a separate addendum can be provided to be able to capture your business expenditures. Here, cash flow projection. This is a part of this page over here. These are things that we take into consideration. So owner withdrawals. Owner withdrawals are like personal obligations. So how we kind of capture that information is using a credit report. We take a look at the credit report and see what are your monthly obligations. We also take into consideration cash living expenses. So these are your everyday expenditures, your household operating expenses, your groceries, your clothing, charitable donations, entertainment. We take into that consideration when making a feasibility analysis. Then, like I mentioned over there, owner withdrawals includes cash living expenses and your personal debt obligations. Other things to notate in the FSA 2001, these are just general notifications, special program information. So I think I mentioned earlier that depending on how you self-certify yourself in our application, there's different loan pool funds where the money comes from. So there's no beginning farmer type of loans. Beginning farmers, how Farm Service Agency defines it is that beginning farmers are operations or individuals that have been commercially farming less than 10 years. Anyone that has been commercially farming more than 10 years would be considered a non-beginning farmer. Socially disadvantaged, these are, I think I mentioned earlier that based on your self-certification, race, ethnicity, or by gender. And Part C over here, limited resource loans. So historically, in the past few years, if you've learned about our loan programs, our interest rates are typically lower than commercial rates. But because of the inflation and the rising interest rates, and I think our interest rates are a little bit above 5%. So if in fact that we do have a producer that may not be feasible because of the interest rate, there are limited resource loans. So there's an interest rate tied into that limited resource loan. So I believe it's 5%. So if an applicant does not get approved due to the payment, let's say the interest rate was 7%, just out of conversation. If it's not approved because the interest rate is 7% and the payment is X amount, if we're able to approve the loan because that we can apply it at 5%, then we can use the limited resource loan. So that's what the limited resource loan kind of touches on. It's not a typically used program because I think I mentioned that historically in the past, our interest rates have been lower than 5%. But as of right now, because of the higher interest rates, limited resource loans are available for those who do need it. Other notifications and disclosures. The things that I do want to emphasize over here is number 6, test for credit. So if we talk about our eligibility requirements and our normal presentations, that test for credit, it's a disclosure over here is that to apply for our direct loans, an applicant, whether applying as an entity or as an individual, cannot obtain sufficient credit elsewhere. So that means that you can't just apply for an FSA direct loan if you're financially strong enough. But that doesn't mean you have to go through a commercial lender and go through their process before us. If you feel like you can't get commercial credit with or without a guarantee, have us make a determination based on our review of your financials, and we can determine that, because a lot of the commercial lenders out there have similar credit underwriting practices. So if you don't meet a certain debt to income ratio, a debt to loan ratio, they typically you won't get entertained over there. So if we feel like you can't get that commercial credit, you don't have to apply for a commercial loan. So that's a conversation, a working relationship that you built with your loan officer over there for them to understand. Number 8, financing statements. So if you're applying for an operating loan, if you're looking to purchase livestock, you're looking to purchase machinery, equipment, there's not a proof of ownership that is given for livestock that you purchase. So the UCC, which is the Uniform Commercial Code 1, is a public lien filing that's done through the Secretary of State. So FSA, if you're applying for an operating loan, can take security on crops, can take security on livestock and equipment. This is how FSA perfects her security, is that with a $9 fee that's issued out to the Secretary of State, that's their fees to file the UCC. FSA files that UCC one to show that the agency has a security interest on equipment, on the livestock. So those are two things that I emphasize when talking about the application portion on this side here. Other things to kind of notate with supporting information and just more of a rehash over here is that financial records, last 3 years tax returns. For microloans, like Kameron mentioned, it's lower documentation, so 1 year is only required. Production records for the last 3 years, not non-farm income statements, credit report fee, depending on how you apply. If it's individual, $16. If it's a married couple, like an informal operation like husband and wife, $24.50. If there's an entity's applying, there's an entity credit report that's required of $50,000. 80-1026 is highly erodible and wetland certifications. Because we're a federal entity, we have to adhere to environmental rules and regulations. So the 80-1026 is a form that we use to verify that there's no highly erodible lands or wetlands in the property. There's other situations, and as far as if there's a spouse, like let's say a non-applicant spouse, what that means is that if it's a husband applying and he's married, because Arizona is a community property state, there's implied interest with any assets that any spouse owns. So if that's your particular situation, talk it over with us, because there might be some signatory requirements for the non-applicant spouse in relation to our loan programs. Other things that are useful, signed sales agreement. So again, if it's signed already and in effect, we can try to work with it. But if you're interested in purchasing property, let us know. We can talk it over so we can try to ensure that you have a well-communicated purchase agreement with your prospective seller or real estate agent. Then I think I mentioned earlier about the entity and some of the entity requirements over here, organization documents, balance sheets, and whatnot. But again, talking in general sense, in any specific situations or unique circumstances, talk it over with your loan officer, then we can help guide you along the way. Okay, this is the 80-1026. This is just basic information in regards to the operation. And this is filled out with us if you're applying with the loan programs, but processed through our farm program side. So with this 80-1026, it's just a self-certification that there's no, like I said, highly erodible lands or wetlands. Then if you're leasing property, then our farm program side and FSA does ask for the lease agreement in relation to the business operations. Then over here is just a slide of our current interest rates over here. So our direct loans, direct farm operating loans at 5.125, ownership 5.375. And just a quick thing that I do like to mention over here is that it's a fixed rate, and we take the lower interest rate of either approval or closing. So if you get approved at 5.125 in April and May's around the corner and we're going to close the loan in May and it goes down to 4.875, you get the 4.875. Same thing with the ownership loan. And okay. Then there's other different ownership loan interest rates over here. If it's a joint financing or down payment, there's specific requirements to those different types of programs. They are available. If you're interested to learn more about it, let us know and we'll be happy to talk about it. Then our emergency loans. This is one of our different programs over here, is that if there's a declared disaster, the emergency loan can be in effect. What this emergency loan does, in summary, is help an operation get back to pre-disaster conditions. So majority of the disasters that are declared here in Arizona are drought related. In Arizona, it's an irrigated state. So if you do have experience or trouble with drought, and you want to inquire about this program, talk it over with our agency loan officers, and we'll be able to help you out. And I think that's it. And I think, okay, I think I'm making good time over here, and I see that we have some comments in the chat box. Tiffany, I don't know if you want to read if there's questions I can try to answer, or any of my staff can assist with.
So we posted a lot of resources in the chat, and if anybody has any questions, you are more than welcome to unmute yourself and ask, or you can drop them in the chat. But now is a good time to ask all those questions. I'm also going to put up our survey on the screen. So that way you guys can scan that QR code and just kind of let us know how we did. But we will now kind of enter into a Q&A session.
Yeah, and if anyone has questions, just feel free to interject. And the vision behind this is that a lot of people have questions behind our loan application process. So that's the format that we're kind of working with over here. So if there's any specific questions in regards to our loan programs, eligibility, feasibility requirements, feel free to ask, and I'll be happy to answer.
We did have a little bit lower participation today, so I don't know how many questions we'll get. But if you are okay with it, I can also send out your email for people to ask their questions when I send out the recording as well.
For sure. That's not a problem. I know that a platform with a lot of people doesn't spur a lot of questions. So if Tiffany can provide my email, then if you have any specific questions that I can try to answer, please reach out to me. Then I'll be happy to help.
I guess if nobody has any questions, I just want to say a big thank you to Fred, Cameron, and Sean for giving such a great presentation today and kind of teaching us more about the farm loan process. So that will conclude this month's Urban Ag Hour. We hope to see you guys next month. We just hope that you can take our survey, let us know how we did. And we'll also drop a link in the chat for next month's Urban Ag Hour if you guys are interested in joining that.